Everyone's obsessing over who has the most GPUs. But right now, the company that makes the memory those GPUs plug into can only fill half to two-thirds of its orders, and its stock is up almost 700% in a year because of it. This is what Micron actually makes. Why memory, not raw compute, might be the real bottleneck in AI right now, and why a company worth over $1 trillion still trades at one of the cheapest forward earnings multiples in the entire AI trade. On June 24, 2026, Micron reported record fiscal third-quarter revenue of $41.46 billion and guided next quarter to $50 billion, a number so far above what analysts expected that it moved the whole sector. CEO Sanjay Mehrotra told investors Micron can currently fill only 50 to 66% of customer demand for high-bandwidth memory, the specialized chips that sit next to AI accelerators and feed them data. The stock has gone from just over $100 a share to as high as $1,255 in the past 12 months. A memory company selling out its most important product a year and a half in advance. That's not a normal earnings story. Micron Technology is a publicly traded semiconductor company headquartered in Boise, Idaho, trading on the NASDAQ as MU. It has a market cap of roughly $1.1 trillion, up almost 700% in a single year, on trailing revenue of $90 billion and net income of over $50 billion. Here's the number that matters most. Its forward price-to-earnings ratio, what you're paying today divided by what Wall Street expects it to earn next year, sits at under 7. For comparison, that's cheaper than most industrial companies growing at 5% a year. Micron is growing revenue at triple digits. Micron makes memory chips, not the processors that do the thinking, the chips that hold and feed data to them. There are 3 product lines: NAND, for long-term storage, standard DRAM, the memory in every phone, PC, and server, and now, the one driving everything, high-bandwidth memory, or HBM, stacks of DRAM built to sit directly next to an NVIDIA or AMD chip and feed it data fast enough to keep it from sitting idle. A GPU without enough memory bandwidth is a very expensive chip doing nothing. That's the pitch. NVIDIA, AMD, and every major cloud provider now need Micron's memory just as badly as they need the processors themselves. Here's how Micron actually got here. October 1978, 4 engineers found the company in the basement of a dental office in Boise, Idaho. June 1984, a NASDAQ IPO at $13 a share. 2006, Micron and Intel form a joint venture to build NAND flash memory together. 2017, Sanjay Mehrotra, a co-founder of SanDisk, becomes CEO. 2021, Micron starts betting heavily on high-bandwidth memory when it's less than 1% of the entire memory market, years before anyone was talking about an AI boom. April 2023, China bans Micron's chips from critical infrastructure, costing roughly $4 billion a year in lost revenue. 2024, Micron secures $6.1 billion in CHIPS Act funding for new fabs in Idaho, New York, and Virginia. June 2026, record third-quarter revenue of $41.46 billion, with fourth-quarter guidance at $50 billion. July 2026, Micron raises its U.S. investment commitment to $250 billion, the largest chip buildout in American history. And by August, the stock is trading near all-time highs, with Wall Street price targets as high as $16.25. So what does Micron say comes next? Management has told investors to expect very tight memory supply through 2027, tighter, in fact, than 2026, with meaningful new capacity not arriving until 2028 at the earliest, because new memory fabs take years to build. The $250 billion U.S. investment plan runs through 2035, aiming to produce 40% of Micron's DRAM domestically, anchored by what will be the largest semiconductor manufacturing site in U.S. history in upstate New York. The next battleground is HBM4, the next generation of high-bandwidth memory, where Micron is racing SK Hynix and Samsung for allocation on NVIDIA's upcoming Rubin platform. The bet: the memory shortage doesn't just persist, it gets tighter before it gets better. So what's Micron's actual edge? Scarcity, structurally. Making advanced memory at scale is one of the hardest, most capital-intensive things in semiconductors, and only 3 companies on the planet can do it. Timing: Micron leaned into high-bandwidth memory back in 2021, before the AI boom made it the most valuable chip real estate in the industry. Geography: it's the only major memory maker headquartered in the United States, which matters for CHIPS Act money and for customers wary of leaning entirely on Korean or China-adjacent supply chains. In breadth, unlike HBM-only bets, Micron still sells NAND and standard DRAM into phones, PCs, cars, and every data center on Earth. None of that guarantees Micron wins the AI trade. It does mean almost nobody else can even enter it. So how does Micron stack up? Against SK Hynix, still the clear leader with well over half the HBM market and NVIDIA's primary supplier, Micron is the challenger. It's overtaken Samsung into second place, but it's still playing catch-up on volume. Against Samsung, Micron is smaller and less diversified. Samsung also runs a massive foundry and logic chip business Micron doesn't have, but Micron has moved faster on HBM for qualification. And against all of them, the honest answer right now is that competition barely matters. Every major memory maker is sold out through the end of 2026. The real fight isn't for customers. It's for who can build capacity fastest. CEO Sanjay Mehrotra summed up the quarter this way. Quote, Micron's record fiscal Q3 financial results and even stronger outlook for Q4 reflect the strategic value of memory in the AI era. It's a convenient thing for a memory CEO to say. The fact that Micron can only fill half its HBM orders is what makes it hard to argue with. None of this comes without risk. There's history. Memory has crashed roughly every 2 to 4 years for over 4 decades, and Micron's own revenue nearly halved in 2023 when the last glut hit. Nothing structurally prevents that from happening again once all this new capacity, from Micron and its competitors, comes online around 2028. There's China. The 2023 cybersecurity ban is still costing Micron an estimated $4 billion a year, and the company is reportedly preparing to exit China's data center memory market entirely. There's capital intensity, $27 billion in spending this fiscal year alone, $250 billion committed through 2035, money that turns into a margin problem fast if demand ever cools. And there's the valuation paradox itself. A forward price-to-earnings ratio under 7 only looks cheap if next year's earnings estimates actually show up. In a boom-bust industry, that's never been a safe assumption for long. So why does any of this matter beyond one company's stock chart? Because Micron's own numbers are the clearest evidence that the AI bottleneck has shifted. It's not just about who has the most GPUs anymore. It's about who can get enough memory to actually feed them, and right now nobody can get enough. The bull case, a scarce, oligopoly product, a company that bet early and is now trading at one of the cheapest forward multiples in the entire AI trade. The bear case, the same violently cyclical business that has humbled this industry every few years since the 1980s, now making its biggest, least reversible capital bet ever. If the memory cycle turns before 2028 the way it always eventually has, a trillion-dollar company can look very different very fast. So which is it? The cheapest real bottleneck in the entire AI trade, trading at a forward multiple most software stocks would kill for, or the same 47-year-old boom-bust memory business about to prove, one more time, why it never trades expensive for long? Comment your take below.